Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 8th of November, comes to you from London. And we start just by looking at what's going on with COVID cases in Europe. So the green line here is actually the UK. This data coming to you from Our World and Data and Updata. And if you want to add that into your system, really straightforward. Just go to All Data Services and Our World and Data. It's a free resource that you can get from the internet. You just select that data source. So we're seeing here how UK cases per million are falling down. So this is normalized data so that we're comparing like with like, if you like. And so the blue line is Germany and the green line is the UK. And we can see that Germany is now making a new high for total number of cases, whereas the UK is falling. So it'd be very interesting to just watch how these charts develop, but not a good situation in Europe, and we're seeing a lot of other countries rocketing similarly, and the UK actually seems to be falling away, having had its rocket. So you might say that the UK was ahead of the curve here and now falling away. Now we're seeing those cases pick up in Germany. So we'll take a good look at that later. But first of all, we start by looking at markets. Dollar index, remembering this is my weekly, daily and 60-minute charts with the corresponding point and figure charts. If we're above the cloud, we're bullish. If we're below the cloud, we're bearish. So long term, we are just seeing this recovery, the dollar making new highs. The medium-term trend is pretty clear, and we are holding the short-term bullish trend with quite a lot of upside targets. So it looks like a better week in store for the dollar. And if we look at the euro, of course, that then means that the euro is looking weaker. We've got a downside target, some 2.4% lower, and we are just struggling below the cloud at the moment. The most important thing is that October low. If we break that, then that will be bearish, of course. Sterling sitting at 134.95, first time really below the 135 level since the beginning of October. So we are seeing that play out, with sterling weaker against that stronger dollar. Against the euro, sterling has also fallen. Last week's expectations on interest rates have weighed heavily on sterling. That's what we see here at the end of last week, and that was the interest rate decision showing through there. So sterling is just looking a little bit weaker, but the trend has been slightly up. Bitcoin is sitting at $66,000, that's a new high, and we still see this target of 83,000. Mini targets coming in at 70,000, 72,000. So don't be surprised to hear new highs for Bitcoin. And I should declare that I own some Ethereum, so that's an interesting chart as well. Looking at the S&P 500 index, it's nudging higher and had a pretty good week last week. There's the weekly candle. So a little bit of a doji on Friday, where the range we ended up sort of where we started, but we are seeing still that the trends are very bullish there. It has been a one-way direction really for the market. And again, the Nasdaq making new highs as well, shrugging off some of the warnings that we heard from Amazon and Facebook and others. The futures are flat this morning, so our call for the market open is flat. Looking at the VIX volatility, we're sitting at 17, so it's slightly raised, but on the whole, we are still the fear index is still well below the cloud on the medium and long-term charts. The DAX in Germany is little change this morning, and the CAC 40 is up 0.1%. So again, we're seeing these markets just making new highs, edging higher, but just no real clear direction this morning, waiting for the US to open. Japan was down slightly. The Hang Seng was down 0.4%. Chinese property shares still weigh heavily there. And if we look at the Shanghai market itself, we are actually still just below the cloud here. And you'll notice, compared to the US and European indices, just struggling to make new highs there. The Sensex in India up 0.75%, looking very strong indeed. We've got this target long term to 50% higher, so the Indian market looking pretty good. The Aussie market was relatively unchanged as well, so that's quite key. Taking a look at, we'll look at the energy mix shortly, but taking a look at some of the soft commodities. Wheat up 0.6%, breaking to new highs there and activating these upside targets. So wheat is looking strong long term. Gold is holding the $1,800 mark. We had a good move on Friday. Looks like we might be just breaking out of this this cloud support here, and on the daily chart we're back above the cloud. So that is good news for gold. We've got some upside targets on the short term. 1825 not yet met. 1866 a good deal higher, and of course we've got some quite big upside targets on the longer term chart, but this 1900 level is really the key. If we can break it back above that 2000 level that we saw last year, that would be good for gold, obviously. Looking at platinum and palladium, we've got fairly strong showing this morning, up 0.5% on platinum, so it's starting to just look a little bit better. Again, this recovery in precious metals starting to show through. Taking a look at the US 10-year yield, we're sitting at 1.48%. That has dropped back after the Fed meeting last week. Interest rate expectations have been dampened. Taking a look at the energy mix now, we've put out our call to clients first thing this morning. We're actually bullish on oil. We're actually moving back above the cloud. We've got good upside targets there. So oil looking like a good start to the week. And the same is true of WTI, of course. US nat gas, curiously, is in a little bit of a range at the moment, and we're just struggling sort of this 550, 580 range, and that's building as a range. But we are potentially looking at a triangle breakout there, and that could be quite interesting to watch over the coming weeks. That, of course, this is the daily chart. This is longer term, so we need to just watch for that break. But that is looking interesting, and again, we are just holding the medium-term bullish, short-term bullish support there. We have gone neutral today. This is the 1 minute, the 60-minute, and the daily. We have gone neutral today because we've got targets in both directions. Coal is sitting at 107. Looks like it might be bouncing on the cloud there. A move lower would be, of course, very bearish for coal. Not yet through on the cloud for a recovery, but we are starting to see some improvement in some of the energy contracts. Emissions looking strong for a breakout now, having sort of broken that range that it was stuck in. We've got 62 as a likely target at the moment. We're sitting at 60.73. Looking at MBP, up 8% this morning. Gas prices now clearly starting to trade into a new uptrend, and that is good news, of course. And the same for TTF. Not great news if you're a consumer of gas, but if you're a supplier, then that, of course, is good news. And looking at German power, it's up slightly this morning. We've been bullish on gas this morning, but neutral on German power, just not quite as clear. And the same on Nordic power. Again, we're range bound here. We're looking at the quarterly contract. We've got good upside targets, but we are below the cloud, so it was a difficult call there. That's it for today. Until tomorrow, happy charting. See you then.